What's up, family? It's good to have you back. Welcome to the new Black Wall Street. Now, if you are new here, let me just say, we're happy you found us. This is the place where we break down what's happening in the markets. We try to make sense of all the noise. We talk about building assets for the long run. We talk about positioning ourselves to be ready for the big moves, hopefully before everyone else piles in. It's about getting ahead of the curve, not just chasing it. We're all here to learn together, to build together, and to understand this complex world of money a little bit better each day. This week is a big one. No, really, sometimes people say that, and it's just hype. But this week is genuinely packed with events that could shake things up. So, let's set the stage. The market has been on a bit of a roller coaster lately. Last week was a prime example of that feeling. We saw prices swinging up and down with more energy than usual. It felt like a tug of war between two very strong forces. On one side, you have the bulls, the optimists, who are full of hope. They see the incredible power of artificial intelligence, the potential for more money flowing into the system, and they believe the market is ready to charge ahead to new highs. They look at the innovation and think, the sky's the limit. On the other side of the rope, you have the bears, the skeptics. They are feeling more cautious, maybe a little fearful. They look at how far and how fast prices have already run up, and they wonder if things have gotten a bit too expensive, a bit too frothy. They worry about inflation, interest rates, and the possibility of a pullback, or a correction. They're the ones saying, let's not get ahead of ourselves. What goes up must eventually take a breather. This tension between hope and fear is what created that volatility we just experienced. It's a classic market standoff. This brings us to the big question for this week. Which side is going to win the tug of war? Are we about to start a powerful new leg higher, fueled by amazing earnings and AI excitement? Or are we finally due for that pullback that the cautious voices have been warning about? This week has all the ingredients to give us a real answer. Let's walk through the week, day by day, so we know what to watch. The action kicks off right away on Monday, February 23rd. The reports we get will give us an early read on the consumer and the industrial sector. We'll be watching names like Domino's Pizza, ticker DPZ, Hims and Hers, ticker HIMS. These companies tell us a story about consumer spending. Are people still ordering pizza and investing in their health and wellness? Strong results here would be a positive sign. We also have Kratos, ticker KTOS, which gives us insight into government spending in a key area. It's a mixed bag, but it sets the early mood. Tuesday, February 24th, turns our attention to global e-commerce and fintech. The big name to watch is Mercado Libre, ticker MELI. Think of it as the Amazon and PayPal of Latin America, all rolled into one. Its performance is a huge indicator of consumer health and digital adoption in a massive growing market. We also get reports from restaurant chain Cava and the much talked about AMC. These names give us another pulse check on whether people are going out and spending money. Thursday, February 26th, keeps the tech theme rolling, with a focus on AI, China, and cybersecurity. We'll hear from Baidu, ticker Bedu, and its AI ambitions. Scalar, ticker ZS, a major player in cloud security. We'll also be watching Dell, ticker Dell, for hardware demand, and Marathon Digital, ticker Mara, for a read on the crypto mining space. Alright, let's talk about the main event, the day the entire market is waiting for. Wednesday, February 25th, after the market closes, Nvidia, will report its earnings. This might be the single most important earnings report of the quarter, maybe of the year. Nvidia has become the undisputed king of the AI revolution. They make the super-powered chips, the GPUs, the brains behind everything from ChatGPT to complex scientific research. Nvidia isn't just a company anymore. It's a barometer for the entire tech sector and the broader market. The expectations are astronomical. Wall Street expects about $65.6 billion in revenue this quarter. That's roughly a 65% increase from last year. Think about that. A company this size growing that fast is almost unheard of. Jensen Huang has already fanned the flames. Demand for Blackwell chips is insane and off the charts. He basically says they're sold out well into the future. So the market isn't just expecting good news, it's expecting a miracle. If Nvidia delivers a massive beat on numbers and gives a super optimistic forecast, it could be a powerful catalyst for a market-wide rally. It would validate the AI narrative. You could see other semiconductor stocks move higher. Cloud companies like Snowflake could jump. Business software giants like Salesforce, who also report Wednesday, could rally too. But there's a big flip side. What if Nvidia fails to meet these sky-high expectations? Or guidance is merely great instead of miraculously divine? Because expectations are so high, even a slight miss could feel like a major failure. That could trigger a sharp, sudden sell-off, not just Nvidia but across the tech landscape. It could give the bears control and kick off a broader market correction. The stakes are incredibly high. While everyone is laser-focused on Nvidia and the tech earnings bonanza, there's another major storyline playing out in the background all week long. That's the Federal Reserve. Throughout the week, we have a whole lineup of Fed officials scheduled to give speeches and interviews. We'll be hearing from influential figures like Governor Michael Barr, Vice Chair Michelle Bowman. When these people talk, the market listens very, very carefully. They set interest rates. Their words can send ripples through every asset class: stocks, bonds, currencies, commodities. So, what will the market be listening for? It's all about the tone. Traders and investors will dissect every word for clues about the Fed's plans. Inflation. Is it coming down as quickly as they'd like? Job market. Still strong, or showing weakness? Path of interest rates. The big question is, when might the Fed consider cutting rates? A more dovish, optimistic tone could suggest cuts are on the horizon. That's generally great for stocks, especially growth in tech. A hawkish, cautious tone could spook the market. It would signal the Fed is worried about inflation and may keep rates higher, longer. That's a headwind for stocks. Higher rates make borrowing more expensive for companies. Safer assets like bonds can look more attractive. Recent commentary says policy is in a good position, but any deviation from that script will cause volatility. Don't just watch earnings this week. The macro story driven by the Fed matters just as much. The market constantly weighs these forces against each other. Track company news, and keep one eye on Federal Reserve headlines. They're a crucial piece of this week's puzzle. Okay, the market is at a crossroads. We know the key earnings dates. We know the Fed is a wild card. With all this going on, it's easy to feel overwhelmed. That's why we need a simple, clear game plan. Forget trying to predict everything. Instead, let's focus on a few solid rules that can guide our decisions and help us manage risk in a volatile week. This isn't about being a hero. It's about being smart and disciplined. Here is a straightforward 4-step trading plan to navigate the days ahead. First, rule number 1. Focus on high-quality setups. This is not the week to chase every shiny object or trade every single company that reports earnings. That's a quick way to get chopped up. Instead, be selective. Do your homework and identify the stocks that have the best potential, clearest charts, most favorable risk-to-reward ratio. Are you looking at a stock that has been building a solid base before earnings? Does the options market suggest a big move is priced in? Pick your battles. It's better to make 1 or 2 well-thought-out trades than 10 impulsive ones. Second, rule number 2, watch the market's reaction, not your prediction. This is a huge one, and it's where many traders go wrong. They become so convinced a stock will go up or down after earnings that they ignore what is actually happening. They fight the market. Don't do that. The report itself is only half the story. The other half is how the market chooses to interpret that report. Trade the reaction, not the news. Let the price action be your guide. Third, rule number 3, manage risk, especially around the Nvidia report. This is critical. We know that volatility is going to be extremely high on Wednesday, Thursday. This means prices can move very far, very fast, in both directions. If you are going to trade around this event, you must protect your capital. This might mean using smaller position sizes than you normally would. It definitely means knowing exactly where your stop loss will be before you even enter a trade. This is a week where discipline will be rewarded. Don't let one trade, even a tempting one, blow up your account. So, that's the lay of the land for this massive week. We have the potential for major fireworks. Nvidia's report on Wednesday could light the fuse for a new market rally or pour cold water on the AI hype train. The Federal Reserve speakers will add another layer of uncertainty, shaping expectations around interest rates and the economy. A whole host of other companies, Mercado Libre, Baidu, will fill in the global economic picture. It's a lot to take in, but having a plan makes it manageable. Quick reminder, everything here is educational and informational only. This is not financial advice. I'm not telling you what to buy or sell. The goal of the new Black Wall Street is to empower you with knowledge so you can make your own informed decisions. Do your own research, understand your tolerance for risk, create a plan that fits your financial goals. Our community is a place to learn and discuss ideas, but you are the CEO of your own money. Practice being a disciplined, observant market participant this week. Keep your trading plan simple, stick to your rules. Don't let emotions like greed or fear drive your decisions. Pay close attention to how the market reacts to big news. Watch the price action. Watch the volume. Lessons appear every single day, trade or not. The more you observe, the more you'll understand the market's personality, and the better prepared you'll be for the next opportunity. Stay alert, stay curious, keep learning. The journey of building assets, knowledge, a lasting legacy, a marathon, not a sprint. This week is one part of that longer race. Want to continue the conversation? Join our community. Share what you're seeing. Ask questions. Learn from others' experience. Let's navigate this week together. Stay disciplined. Come out smarter on the other side. I'll see you in the next breakdown. Be ready.